Good afternoon, everyone. Welcome to today's webinar on Crypto and Blockchain 101. My name is Barbara Salazar. On behalf of CFA Society, I would like to thank you all for joining today's webinar and also for sending through your questions. We received 40 plus questions before the event, so thank you so much for the engagement. Today, we have a very special speaker with us. Her name is Janine Granger, and she's the CEO and co-founder of Easy Crypto, New Zealand's largest cryptocurrency exchange platform that operates in 4 countries and has 1 billion sales. Before we start, just a couple of reminders. First reminder, feel free to use the Q&A function to send through any questions you have as Janine goes through her presentation, and she will answer those questions at the end of each section. And the second reminder is that we have a couple of events coming up. First of all, we have the ethics webinar focused on banking and insurance with Claire Bollingford from the FMA. And then we have our forecast event, which in this opportunity is going to be an online event. It's usually in person, and we have moments to share with all members, but in this opportunity, we will have an online version with Toby Moskowitz. So if you are interested in any of these events, please contact CFA Society and register. Now, without further ado, I will hand over to Janine Granger.
Thanks very much, Barbs, and thanks to CFA Society for having me today. Firstly, I just want to, sorry, just checking my audio settings. Thank you very much everyone for having me. And as Barb said, please do feel free to ask questions throughout the event. I'm keen to try to answer all of your questions. I got a huge list of questions in advance, which was really exciting. I've woven as many of them as I can into my presentation, but I'm keen to make this interactive, and do yell out in the chat when you have questions. Barbs will be sending them through to me, and I will be stopping at the end of every section so that we can have a bit of a discussion and make sure that we're all that any questions you have are answered along the way. So I'll just share my screen now. Cool. So what we're going to cover today is I've broken this up into 4 sections, which are firstly, what is cryptocurrency and blockchain? So this is a bit of a 101, be quite high level, but hopefully just give you what you need to know, the understanding across what those things are. Secondly, going to be talking about some popular crypto assets. So what sort of assets are people purchasing, and more importantly, why? And here's where I'll hope to answer your questions that have come through around what gives these assets value, why choose one over another, and how are they sort of different and similar to traditional financial assets. In the third section, I'm going to dig a little bit deeper into DeFi, or decentralized finance, which is an area that you might have heard about before. And if you haven't, you probably will hear about it more over the coming months and years. And then lastly, in section 4, I tried to mop up a few of the other questions that had been asked during the onboarding. And hopefully we'll cover a few of those there, and then we can have a bit of an open Q&A session for anything that hasn't been covered so far. So to kick us off, what is crypto and blockchain? Actually, before I get into that, I do like to start presentations with just a little bit of I guess a bit of a scene setting around cryptocurrency, because they've been around for a long time. We've all heard about them, talked on the news and the media, a bit of is it just a bubble? Is it a hype cycle? But they're really not going anywhere. And one thing that people, don't always realize is how significant these assets are. So this is a list of the biggest assets in the world by market cap. You can see that Bitcoin comes in, and this was a screenshot I took on Monday, so it's possibly moved a little bit, but it's typically sitting here around number 8 on the market in terms of total market cap, more valuable than Facebook and Tesla, and pretty close to overtaking silver. And if you looked at all cryptocurrencies together as an asset class, they would be sitting up here somewhere between gold and Apple. So just a bit over Apple, I think around about $2.4 trillion in market cap at the moment. So they really are significant assets, and definitely something worth getting to understand a bit better, and having, a little bit of knowledge to engage confidently in the sector and to know what it is that you might want to get involved in, or if you're an advisor, you might want to advise clients around. So what is cryptocurrency? In a nutshell, cryptocurrency is simply a way to exchange value. So from that point of view, it's not very revolutionary. We've had lots of ways to exchange value over history, from shells of gold and barter systems to paper money today. But the difference between this and previous ways to exchange value is that it is fully digital. Now, this is something that our money today is not fully digital. It's electronic. You can usually see it in your online banking apps, but it's not properly digital. It's also decentralized. And what this means is that it doesn't require any intermediaries to make the system work. So typical money exchange transfer systems require either central banks or the regular banks, credit card payment institutions, other intermediaries to provide trust in the system, so that when you go to a shop, say you want to buy a can of Coke down at the dairy and you use an electronic payment system, there's an intermediary that is vouching to that shop owner that you are good for that payment. And the really incredible thing that cryptocurrencies solve for is it found a way to make payments decentralized while still being trustworthy. So you don't need to have an intermediary providing trust. The system itself provides the trust that is necessary to make the entire system work. And that system, which is probably something you will have heard of, is called blockchain. And in a nutshell, blockchain is just a database. And I think you guys will all be familiar with the concept of ledgers. And blockchain is just a ledger. It's nothing massively revolutionary from that point of view. But what makes it different from other ledgers is that it's completely public, or at least most blockchains are public, so everyone can see what happens on that ledger. Very importantly, it's uneditable. So once a transaction is entered onto the blockchain, no one can go and falsify that transaction, change it, reverse it. Once it's in, it's locked in. So it's a really, and this is what makes the system so trustworthy, is that those transactions cannot be altered once they're on the blockchain. And the way that blockchains achieve that is through cryptography, which is where the term cryptocurrency comes from that cryptography that creates the system and makes the system trustworthy. And the last feature about blockchains that's quite fun is that they're programmable. So programmable money is probably not a term that most of us have heard, but I think it's something we're going to hear more over time. And blockchains allow value transfer to happen automatically under certain conditions. And if you've heard of things called smart contracts, that's what smart contracts are. So I could say, you know, I could have, say, a bet with Barbs that tomorrow is going to be sunny, and she's like, nah, it's going to be rainy. And I'm like, great, let's make a contract on it. So we can lock up, say, $50 worth of Ethereum onto a contract. That contract references an independent source, say NIWA, to see whether it's sunny or rainy in the place that we're talking about having this bet. And then that money would be automatically paid out to whoever won the bet based on those conditions being met. So that might sound like a little bit of a random example, who would want to do that? But think of things like insurance payouts. Imagine if you could have insurance on your car, that the insurance contract automatically is checking that you're up to date with your premiums. If you have something like an impact or a weather event in your area, that insurance contract could be automatically calling to trusted third parties like mechanics or weather forecasters to see whether you are due for a payment. And if you're up to date, you've got your contract has met those certain conditions, the insurance company could automatically pay you out without needing anyone to check over your paperwork, without needing any intermediary. So it really does open up a huge range of potentials of what can be done using blockchain technology. And that's really the reason why people get quite excited about blockchain. But today we're talking about blockchain in the example of crypto assets or cryptocurrencies, which is one of the many uses of blockchain, but that's what we'll be focusing on today. So in terms of cryptocurrencies, they really are a very diverse bunch. So we've had, Bitcoin was the very first one. So blockchain as a concept was created in this white paper in the beginning of 2009, and the token or the crypto asset generated through that, through the blockchain designed in that white paper is now called Bitcoin. And that's very much the first generation of cryptocurrencies. And one thing that I really like to stress when I'm sort of talking to people about crypto is that there's a lot of, you hear a lot of negative comments around, oh, the energy uses of crypto or how slow it is or how costly it is. All of these sorts of things are criticisms about Bitcoin, and Bitcoin's very much first generation. And when you think about the first generation of mobile phone that you had, it probably looks very different from the mobile phone you have today. And this is really the point that I want to make here, is that these things are evolving, they're improving. You know, humanity is so innovative, and so we're always making better versions of things. And cryptocurrency is really a very clear example of this. So first generation is great. It solved for a problem. It did it in a way that was really revolutionary and unique, but it had flaws, and we've been constantly iterating and building on those. Generation 2 is typically what's called platform currencies, and I've put Ethereum as the logo here, so I expect a lot of people have heard about Ethereum, and it really leverages that programmable nature that Bitcoin started, but Ethereum really took it and leveraged it hugely. So heaps of other projects can build on top of Ethereum. It really made use of this idea of smart contracts, and it's a very powerful infrastructure sort of cryptocurrency. Generation 3, people often talk about these sort of more distributed ledger types that aren't even blockchains. They're sort of other ways of doing the infrastructure for digital value. And there's all sorts of things happening in that space. And then Generation 4, I'm not sure if we've got there yet. Maybe we have, maybe some people on this call have sort of ideas of what Generation 4 looks like. But the point I want to make here is really just that this space is changing and evolving rapidly. There's so much happening, and it's going to keep getting better and keep improving and solving for problems. So my last slide in this section, and we'll jump onto some Q&A around crypto and blockchain in a minute, but I just wanted to talk through a couple of different types of cryptocurrencies. So there's many, many, many types of cryptocurrencies out there, but here's a couple or a couple of sort of, types of cryptos that you might come across. So the first one is payment cryptocurrencies. And Bitcoin, of course, can be used as a payment cryptocurrency, but it's not ideal for that because it is relatively slow. Bitcoin only sends transactions once every 10 minutes. So, if you're going to pay for a Coke at the dairy with it, you'll be standing there waiting around for your transaction to confirm. So from that point of view, it's not ideal. It's not fast, and it's not that cheap for payments either. Stable coins can be great for payment currencies because they don't fluctuate in value. So they will always be pegged to, say, the US dollar. Or else you can have other currencies such as XLM or Stellar, which is designed to help make international remittances really fast, really quick and easy, and provide a bit of a competitor to the SWIFT payment system. Infrastructure currencies, like I talked about, there's Ethereum as a platform cryptocurrency. There's many others that are coming out as well. Things like Cardano, Polkadot. There's a huge range of different platform cryptocurrencies trying to solve different problems or compete to be better at solving the same problem. Financial cryptocurrencies are very exciting, and I will jump into this in section 3 later on, so I probably won't talk about those ones right now. There's also service cryptocurrencies, so things that have, merging blockchain with real world problems. So for example, file storage, like cloud file storage services. You can have cryptocurrencies that you use to buy and sell storage on your device. So your computer might have spare capacity, you rent that out to people to use as like a distributed cloud storage service. Medical records are another one that's starting to see a bit of cryptocurrency useful, not necessarily public cryptocurrencies, but tokens that enable creation, storage, and security of health records. There's a whole lot of things in this area, things like voting as well, being able to vote for, either in public elections or vote as a membership of a private organization. Say you're part of a gaming community, you can have votes using crypto assets for your voting services. And the last one is media and entertainment cryptocurrencies. So non-fungible tokens is probably the one that's really hitting the headlines at the moment. And what a NFT or non-fungible token is it's a type of crypto asset that is tied to something completely unique. So it represents a unique thing, on a unique digital thing. So for example, Bitcoin is fungible in that one Bitcoin can be exchanged for another Bitcoin, and they're really kind of same. Whereas if you buy a piece of artwork, that's non-fungible because you can't just swap one piece of artwork for another one. They're unique and they're individual. And so you'll see a lot of these digital artworks that people are creating and other types of collectibles. For example, NBA did a quite interesting set of collectibles. I think they're still doing them for famous moves by players over time. So someone's shooting a three-pointer in a particular game, they took that move and they turned that video into a collectible, and people can collect it and sort of own that move. And you might think that's a little bit, bizarre. You can't really own the move, but it's really similar to, baseball cards and other sorts of collectibles. For people who are in that community, it's your way of showing your engagement with that community, with owning something that has value within that community, and it's something unique. So on blockchain and crypto, that was obviously a very quick whip through, but are there any questions? I think, Barbs, there might be some in the Q&A now.
Correct. There's 3 questions that just came up. So first question, when currently paying via Bitcoin, this might take a while to get confirmed. How do you see this evolving to accommodate paying for a Coke in a dairy, for example?
Yes, I think I might have sort of created that question earlier and then answered it later. But my view very much is that Bitcoin is not a good payment currency. I see Bitcoin as being a good store of value currency. Like it's kind of like gold. I think it will hold value long term, and it's a good asset to hold as part of a diversified portfolio, but similar to having gold, I wouldn't go into the dairy and shave off a little tiny bit of gold onto the scales to buy a Coke. So it fills the role of a store of value, but it doesn't really fill the role of payments, but other currencies do. So stablecoin currencies, currencies like Litecoin, Stellar, Tron, even, there's a whole lot of currencies that are really developed for that use case of payments, of being fast, of being cheap.
Cool, thank you. We have another question. Your comment regarding Bitcoin being first generation cryptocurrency with an analogy to cell phones, does that mean that Bitcoin will become obsolete with the evolution in the crypto space? What's your view?
This is a silver ball question, I guess, right? And it's a really interesting one because in most spaces, you see the first mover is not typically the one that has long-term value. So, you know, Facebook wasn't the first social network, Google wasn't the first search engine, Apple wasn't the first phone. So typically secondary or tertiary movers have a better advantage because they can take what the first movers did wrong and improve on it. However, I think my personal view is that Bitcoin's a little bit different because it just has this brand, it has this longevity, it solved the problems of the store of value problems well. It didn't solve the payment problems well, but other currencies are overtaken on payments. And I think Bitcoin will retain value as a store of wealth, just because it's like the grandfather of cryptocurrencies or the grandmother of crypto. It's got the longevity, it's got the brand, and I think it will stay valuable into the future. My 2 cents.
Thanks, Janine. Another question. Could you walk us through a hypothetical application of crypto blockchain tech step by step, for example, in first home buyers?
Is that in terms of first home buyers if we were in a world where home settlements were done on the blockchain, or is this first home buyers as in someone saving money to buy a first home using crypto?
I'm not sure. There's not that detail in the question, but how about maybe we do the second one?
Yeah, so from that point of view, and I'll probably talk on this a little bit more in the next section around sort of why people buy crypto assets and the value. And there's different types of value. There's speculation. You know, you can buy crypto as a speculative investment tool and you're like, hey, I think this will go up in value, so I'm just going to buy some and speculate. But there are other cryptocurrencies that act more like traditional assets. And I'll talk through those in a minute on the next slide, and that might help answer some of those ways of how they can actually be used as part of a diversified portfolio and more of a wealth tool rather than just a speculation tool. Cool. All right, shall I move on? So I thought I would go through a bit of a what's popular and why, and give you guys a bit of a deeper dive into the types of financially oriented crypto assets that people are buying. So just a little bit of background first. So this is when Easy Crypto first came into the crypto market. It was very late 2017, and it kind of looked like this. There'd been this big, huge spike. It was all over the media. Most of the people that were buying crypto were young white males, and it was all about Bitcoin, and typical investment sizes were quite small. So this is what we sort of walked into when we started. And now sort of 3 or 4 years later, it's hugely diverse. For one thing, this massive spike that we saw, so, you know, that looked huge, and now it looks quite small in comparison of where we are now. But what's been really interesting for me on this journey across here is that we've hugely diversified who's getting into cryptocurrency. So Easy Crypto has almost 40% female signups on our platform. So we're not quite 50-50, but we're getting there. We've got hugely diverse age groups coming in. One of our fastest growing and definitely biggest spending segments is the sort of 50, 60 and above generations who are looking for crypto assets as a way to diversify their wealth. We're regularly seeing people sink in excess of $1 million into crypto. And again, it's that generation who, you know, might have $1 million might just be sort of 5 to 10% of someone's portfolio in that, you know, that older age bracket. And lastly, we've seen a huge diversity in the types of crypto assets that people are buying. So I'll have a talk over the next few slides of the different types of things that people buy and why, but I just sort of wanted to set the scene that things have moved on a lot since 2017. So this is stats taken from Easy Crypto's platform just this week. This is what we are selling most at the moment. So Easy Crypto sells over 150 different crypto assets. Bitcoin is the most popular, but it's still only 28% of our total turnover. So we have, this huge range, this very long tail of things that people are buying. Ethereum, which I've already talked about, is the second most popular. Stable coins, which are cryptocurrencies that, their value is pegged more or less 1-to-1 with the US dollar, are quite popular, and often people will be using these to transfer between different platforms because you don't want to have a volatility risk when you move your currency from, say, Easy Crypto to a trading site. Cardano, which is another platform type cryptocurrency and supports a lot of DeFi, is 6%, and Sol, similar to Cardano and also with more of a focus on NFTs, which is 5%. So that's what we're seeing as being the most popular. And the reason that we see people is getting invested in cryptocurrency is, as I've talked about a few times, it's a really interesting opportunity for diversification. So this is always the golden rule of finance, right? Is diversify, diversify, diversify. And crypto assets are becoming more clearly non-correlated with other market movements. They're not uncorrelated yet, but the correlation is definitely weakening over time and weakening quite fast. And so crypto provides a good way to diversify against, you always want to have assets that aren't always going to move all in the same direction. It also provides a really good hedge against inflation, or at least this is what a lot of people believe, and I'm on this camp myself. So for example, with Bitcoin, there will only ever be 21 million Bitcoin. Now, this is something that is built into the code of Bitcoin itself. You can go and, the code is publicly available. You can go and read it, and you can go and see how this mechanism works. It is potential that the mechanism could change in future, but it's a democratic system, and the people who use the system would have to vote on that change. So never say never, but I think it is unlikely that people who have Bitcoin will want to vote to create more, because that would be an inflationary move. So when you compare crypto assets like Bitcoin to traditional financial market products, well, to government fiat currencies like the US dollar and the New Zealand dollar, that there is a lot of printing going on, a lot of quantitative easing, there's definitely a good rationale for putting some funds into crypto assets as a way to hedge against inflation. And then lastly, and this is the one that personally excites me the most, is there's a lot of purchasing of crypto assets, and as time goes on, this is becoming a greater and greater part of the investment logic, which is because of the use cases of those. So not just investing in speculation, not just investing as a diversification and as a hedge, but really investing in the market potential of the crypto assets themselves. So I'll talk through a few examples of that, which is, and I'll sort of liken crypto assets to traditional assets to help, explain what these look like. So as I've already talked about, Bitcoin is kind of like gold. It's a store of value. It's something that has a pedigree, has a good reputation, and people may start going to it in times of sort of distress as a way to safeguard and keep the assets safe. We're not completely seeing that yet. In the 2020 sort of dip the markets took, Bitcoin dipped along with the rest of the markets, but I do think that over time it will start to correlate less and have more of that, store of value ability like gold does. Secondly, these platform cryptocurrencies that I've talked about are like an infrastructure asset. So for example, you could buy shares in Auckland Airport and you're receiving revenue. That airport is, you get dividends from the airport, and the airport is making revenue from all the passengers that go through it, or the aircraft that land in it, or the freight that goes through it. So they have infrastructure that other people pay to use. Similarly, Ethereum and other infrastructure or platform currencies have infrastructure that other projects pay to use. So if you hold that underlying infrastructure, you can make investment returns from the value of that infrastructure going up, but also from similar to kind of like the renting of a store in the airport, you can make returns by people using your holdings of that infrastructure as part of their, the base layer that they build their projects on. And then the last type of asset, I mean, there's many more, but these are just the three that I think are, nice and relevant examples against traditional assets, is like startup cryptocurrencies. So things that are new projects, they may or may not take off, 999 out of 1,000 might fail. But if you find a project that you think is interesting, that has potential, you can invest, and again, like startups, you probably wouldn't mortgage your house and go all in, but you might take a small position in something that you think has real potential. And with crypto assets, one question that I get asked a lot is, well, if anyone can create a cryptocurrency, how do they have any value at all? And it's very much like companies. We could all go today and go to the company's office, dream up some idea, or not even have an idea. We could just go and create a company on the company's office, and that's open to anyone. There's no barriers to entry there. But even though we can all do that, it doesn't mean that the value of shares in Apple will reduce because we've created another dozen companies here in New Zealand. Just like a company and just like any other asset, the project needs to have value for people to want to buy it and engage with it, and for it to have long-term viability. So the fact that there are no barriers to entry to creating new crypto assets is fantastic. It means all these ideas can happen, people can start new sorts of things, but it doesn't mean that they will all have long-term value. This one here that I chose as an example of a startup is actually a really interesting project. It's called Strong Block, and they run nodes, which nodes are part of the infrastructure that blockchain networks work on. And the more nodes that you have in your network, the more secure your network is from the point of view that it can't be easily controlled. So say, for example, if your network only had 3 nodes and someone came and took control of 2 of them, then they have the voting right. It's kind of similar to a company, right? So they then have the voting right and they can control your network. So people who are running networks, so like the Bitcoin network, like the Ethereum network, the more nodes that they have, the more secure that network is. What Strong Block does is it creates nodes that other networks can rent. And so basically, holders of this token are effectively providing infrastructure as a service to other networks, which is something that's valuable and something that people are willing to pay for. So there is definitely a business model there, and there's a service exchange that has value. And this is the case for hopefully all crypto assets that, if you can look into them and understand what is the service they're providing, then you can make decisions for yourself as to, does that have value? Is this something that I want to invest in? Do I think there's long-term viability here? So in terms of what else is driving investor interest into cryptocurrencies, the sort of 3 big themes that I'm seeing is that people they're obviously getting involved because of the returns. And this, again, it does go to the speculation aspect, but I'm hearing a lot of people say, look, my money's sitting in the bank earning next to nothing. So I want to try this different asset class. And again, maybe only 5 or 10% of their portfolio, but putting something into a potential asset that has, or into an asset that has potentially higher returns. There's also increasing regulatory frameworks, which I think is really great that the regulators are catching up with the crypto markets and starting to put in place the protections for consumers. We're definitely not completely there yet, but there's a lot of work being done and there's a lot of work underway at the moment. So this is an area that's really fast increasing, and it's one that, I'm very, very supportive of those protections coming in place. And the last thing that we've seen is really strong institutional grade custody. So one of the big problems with crypto, well, it's not necessarily a problem, it's a feature, feature/bug, is that with crypto, you are the only person in charge of your assets. And for the early adopters in crypto, this was fantastic. It's like, be your own bank. My assets are held only by me. No one else can control them. No one else can take them from me. I'm fully in control of my assets. And while that's amazing and a big selling point for early adopters, it can be a bit scary and a bit of a turn-off for mass adoption, because most people don't necessarily want to be fully in control of their own money. It's a little bit scary. They want someone else to be looking after it on their behalf, and someone that they can call and make sure, that if something goes wrong, if they lose their password, they haven't lost all of their wealth. And so there's a lot of solutions coming out, and these have been around for years, but they're really, they're now proving their, longevity, their security. And there's a lot of great solutions that people can use either as individuals or as institutions to secure their crypto assets without having to hold them themselves. Now, one of the questions that I always get asked is, does crypto have any, or Bitcoin, for example, is there any intrinsic value? Like why is anyone paying for this? Surely it is worth nothing. And there's a nice little quote here from, there's actually a lot of quotes around the late 90s around how the internet would have no value, and there's a lot of parallels drawn between the adoption of the internet and the adoption of crypto assets. And if you ever see the phrase or the term Web3 around, that is around the exchange of value on the internet. So cryptocurrencies, blockchain technologies, NFTs, all those sort of things wrapped together, they're called Web3. So And that's from this evolution of the internet. So the first generation of the internet was all about information exchange. The second generation of the internet was all about social exchange. This is where we started seeing Facebook and Twitter and all of those. And now the third generation of internet is around value exchange. But similarly to when the internet started, it can be a little bit hard to sort of see in the future where this thing is going. But I like to, just look at the drivers of value that you would look at for any other asset, which is really around supply and demand. And on the supply side, as I already talked about with Bitcoin, there is a fixed supply. There's only ever going to be 21 million Bitcoin printed or created, and the introduction of new coins reduces over time. So there's a very clearly deflationary supply side here. On the demand side, however, you have all the things I've talked around, the portfolio diversification, hedges against inflation, those use values, which with Bitcoin can be around a store of value, can be around a transfer of value, but with other cryptocurrencies, there's broader ecosystem access and practical use cases. So if you look at it from a supply and demand point of view, if demand keeps increasing, supply is fixed, hopefully these things will go up in value. And more broadly, looking at different crypto assets, I would apply the same logic that you would use when you're, say, assessing the value of a company. Look at things like, what is the team behind the project? What is the track record? What is the product market fit? What is the, what external validations do they have of their ability to deliver on their promises? Sorry, my dog's just being a little bit noisy in the background. And all the same types of tools that you as CFAs would use to value a company, you can use those tools or similar versions of them against crypto assets. This is the last slide for the section on sort of what people are buying and why. So happy to take any questions to kind of dive into this in more detail.
Thank you, Janine. So there's a few questions here. First question, can individuals or an area of land be considered for setting up an NFT?
Yes, so can individuals or an area of land be considered for setting up an NFT? As in, can you make an NFT for land? NFTs work best when there is a system around that particular type of asset. So for example, with land, if Land Information New Zealand was going to say that every parcel of land in New Zealand is allocated a unique identifier, and that unique identifier is put on a blockchain, that effectively is an NFT, right? Because that there's maybe this 1 meter square piece of land up here has a unique identifier, 1 meter square piece of land in Queenstown has a unique identifier. Those two things aren't fungible. I can't just swap them because they are quite distinct and quite unique. So that would create a system of NFTs for land, and land could then be transferred on the blockchain very easily using that. So that works well if sort of the entity that has effective control or jurisdiction over that area does it. If I just created NFTs for my piece of land in my front yard here, I mean, technically I could. Would anyone sort of agree with my saying that I'm selling this land and it's, like maybe no one would care if I sort of tried to tokenize my front yard. But in concept, yes, it could be done for land. So hopefully that explains that.
Cool. Thank you. There's a couple of questions here on valuation, but I think you already touched on that. So what happens when central banks start doing cryptocurrencies? What happens to the, Bitcoin, Ethereum? What's your view?
Yeah, so I think, and it's a very pertinent question, because as you might have seen, the RBNZ is currently consulting on a CBDC or central bank digital currency. Well, they're just consulting on, I think, the concept of it at the moment. In my view, it's an absolute no-brainer that fiat or government currencies will go digital. The reason I say that is that our lives are fully digital. Like, things aren't analog anymore very much. They're moving digital, and if they aren't already. And currency is one of those things that kind of stuck in the analog world, is that our currencies are not truly digital. So I think it's an obvious, I think 100% I believe that central bank currencies will go digital. What impact that has on Bitcoin and other decentralized currencies, I think they will probably coexist because they fit different use cases. So for example, you know, we've had the New Zealand air points have coexisted alongside the New Zealand dollar for a long time because they have different use cases and they service different communities, and those communities can put different rules around them. So Air New Zealand controls Air New Zealand air points and can say this is what you can and can't do with it. The government does the same for New Zealand dollars. There's overlap and there's ability for those things to be transferred, but they still have their separate niches and ecosystems. In the future, we will likely be seeing 3 different types of digital currencies. There'll be the ones issued by central banks. There'll be the ones issued by companies. So that might be air points, or it might be like a much bigger sort of thing like Libra, which Facebook was trying to launch a few years ago. And then you'll also see the decentralized ones, which are just controlled and governed by no one, but I believe there will still be enough people wanting to use those for them to exist.
Thanks, Janine. Here's another question about applications of blockchain and smart contracts in industries like insurance and healthcare. Do you see these as being used as, you know, a way to store personal data and, you know, up to the point where it could replace things like passports or driver's license?
Yeah, I think it's likely that things will go that way. Reason for that is that if you think of, again, blockchain is just a ledger, but if you look at it as a, you know, your healthcare information is currently stored, who knows how many different medical systems it's stored across, so it's not centralized into one place. You don't have access to it to necessarily check that it's correct. You don't necessarily know who else has access to it, and in the case of, you know, as with some DHB ransomwares recently, you don't have 100% confidence that those systems are secure and that your information is being kept secure and private. With blockchain, they can be set up in such a way that you are the holder of your information and you choose when and how much of that information you reveal to other people. So for example, one really simple example of this is if you go to the supermarket and you want to buy, you know, a bottle of wine. At the moment, the supermarket will ask you to show them your ID card, and that ID card gives them a lot of information about you. You might not want them to know your name, your date of birth, even your address. So if you had a blockchain-based solution, you could simply show them a credential that says, yes, I'm over 18. They don't need any other information about you other than I'm over 18. So having systems that allow you to give really nuanced permission to view certain information about yourself, rather than having to expose a wide range of information for, you know, just getting a bottle of wine. And so that applies across healthcare and all sorts of other things. And I think hopefully in the future we'll be moving to that sort of model, but one that really heavily focuses on privacy and ensuring the privacy retained with the individual, because that's really important.
Cool. Thank you, Janine. Maybe I'll read one more question before we move on to the next section in the interest of time. Do you have any thoughts about HIX? It seems to provide a centralized term deposit product.
Sorry, what was views on what was the product?
HIX. Have you heard of HIX?
I have. I don't know it well enough to comment, unfortunately. But there is a lot of, I'm actually going to talk about DeFi in the next section and more sort of generically rather than specific projects. So that might help, hopefully.
Cool.
On to decentralized finance. I only have a very few slides here. This is a section that I just added late last night, but it's a great one to talk about, and I'm happy to sort of do more Q&A on this one rather than just on the slides. But DeFi is it's a decentralized alternative to the current financial system. So there's a whole lot of different things that sit in DeFi, all of the typical stuff that you can do in finance, and new products are being created and invented all the time. But the real difference is that it's open source, so anyone can get involved with it, anyone can create projects, and there's a lot of interoperability between it. It's fully transparent, and there is no intermediaries such as banks or other financial institutions. Well, there doesn't need to be intermediaries. There can be, but they're not required. So I'll give a few examples of sort of how DeFi and traditional finance or TradFi look. So in terms of DeFi, the funds are held by you. So you are in control of your own money, whereas with traditional finance, you have to give your funds to a bank. Say, let's look at, say we're doing a term deposit here as the example that was just given with HEX. So if I want to have a term deposit with a bank, I have to give my money to the bank. Whereas with DeFi, I can have a term deposit, but I retain control of my funds. In terms of who clips the ticket, with DeFi, no one. I can find a peer-to-peer system or a peer-to-pool system where I can lend, I can put down my term deposit, someone can borrow it, and there doesn't need to be anyone clipping the ticket there. Whereas with banks, every intermediary in the process will be taking their cut. Transaction speed with DeFi is seconds, banking a little bit longer. Accessibility, DeFi is completely open. Anyone with a crypto wallet can connect to DeFi services. There is no barriers to entry. Whereas with traditional finance, I mean, I'm going through this process at the moment. I wanted to put some funds into an investment. I got partway through the sign up process, and it's just like, there's so much to go through for an application for traditional finance. Whereas with DeFi, it's very, very simple and easy. Runs 24/7. It is fully transparent and anyone can see what's happening on the blockchain, and that's really valuable. And lastly, going back to that very first point I said at the opening about trust and blockchain, because of the way that the system is set up, you do not need to trust anyone. The system is trustless. Whereas with traditional finance, I need to trust every intermediary that is taking care of my money, or every intermediary whose hands my money passes through. And I don't even always have visibility. When I lend my money to the bank, I'm not sure who they're lending out to, whether it's in-house, out-house. There's a lot of different people in that process, or different entities, that I have to just trust that they are all legit and above board. So I'll walk through just a really quick example of what DeFi can look like in practice. So this is from the Aave protocol, which is quite a popular DeFi lending platform. And what it does is it does peer-to-pool lending. So as a depositor, I can come and I can put in my money, say USDC. I can take some, say I've got $100 of, stable coins. So in this example, my deposit is not going to fluctuate in value. So I'm just looking at this as solely an interest bearing type of activity. So I can put my deposit into the pool. And then on the other hand, there's all these, on the other side, there's all these borrowers that are borrowing money from the pool. The pool makes sure, the way the pool works is you don't need to have, match one-to-one lenders and borrowers. You can just have a big pool, and the interest rate is live and fluctuates depending on how much demand there is from the borrowing side or the lending side. And all of this is happening via the computer programs and the algorithms. So there's no one sitting there having to forecast demand and adjust interest rates and manually update websites and change advertising collateral. It's all just happening automatically, and it's adjusting second by second to supply and demand drivers. The borrowers will come in and they will put down collateral, and they'll put down digital collateral. Say someone has Bitcoin, they don't want to sell their Bitcoin because they believe it will go up in value in the future, but they want to be able to borrow some money to go and, have a holiday, buy a car, do their day-to-day life. So they put their Bitcoin up as collateral in the platform, and then they can borrow some USDC, which maybe is the USDC that I lent into the pool. We've got a bunch of information feeding in. So in, pricing oracles are just ways that information gets into DeFi protocols. So in this one, it'll just be, there is a oracle that looks at the market price of Bitcoin and goes, okay, this person's borrowed $50 of USDC, and in exchange, they put in $75 of Bitcoin. And we're going to monitor that price of that Bitcoin. And if at any point the price of Bitcoin drops below X, that Bitcoin will automatically be liquidated if the borrower hasn't paid back their loan. So for me as a lender, I have 100% confidence that I will not be in a position where the borrower is defaulted on my loan, because they can't. There's collateral held by them, and that collateral will be automatically liquidated if they're in a position of not being able to meet their repayments, or if their collateral risks dropping below the cost of the loan. And I can also withdraw my funds at any time. And this is one of the things that's really quite fantastic about DeFi. I could have taken as little as $1, deposited it on the platform, left it in there for 10 minutes, earned fractions of a cent, withdrawn with no break fees, no minimum lockup period, none of that. And it really creates this opportunity for micro lending and ability for wealth to be at any level. Like traditionally, wealth has been predominantly available to people who already have wealth. So if you've got money, it's easy to make more money. Whereas with DeFi, it makes all of these wealth management products available to anyone, no matter how much money they have and no matter how much time they have available. And because there's no intermediaries, there's no one taking the cut on this, it all just goes directly to the people involved in the process. So that is a really quick whip through on DeFi. I can see the question numbers have gone up quite a bit, so there's probably quite a few questions here. Should we jump into some of those, Babs?
Yeah, sure thing. So do you think banks should be scared about DeFi?
Yes, I used to work in a bank actually, and I remember that I talked to our head of two of our GMs actually, so the most senior level in the bank, and I mentioned cryptocurrency to them, and they just laughed in my face, and I was like, oh. So I'm out to show them that was probably a bad idea. But I think banks should absolutely be concerned about this. I mean, banks should probably be thinking about getting involved. what this really does is it creates ability for people to do what they have always had to go through banks with, but now all they need is a smartphone and they can access the same services at cheaper rates, faster, less restrictive. It's fantastic.
Mm-hmm. Thank you. Another question on DeFi. How would credit creation work? Like increasing money supply through the creation of loans, like the banks?
As in using loans as collateral to margin purchase more assets, etc. Yeah, this is something I've heard people sort of concerned about, that it creates this fake liquidity that could result in, if there's a downturn, that could create a cycle where there's a whole lot of liquidations going on. That is a possibility. I think though, probably there's not enough people using for it to be a big risk. Like, it's not sort of the financial system isn't built on that. Whereas with, I think, traditional finance, there's a lot more built on top of the fractional reserve system. Whereas I think the amount of crypto assets tied up on things that sort of result in fractional reserve lending is quite low. But that's something that, again, this is a fascinating thing about DeFi, or about crypto more broadly, is that you can get really good visibility over this. So you can go online and look at who's analyzing blockchains and DeFi lending platform, and you can get a really good feel for how many different addresses, how much value of different currencies is tied up in lending, how much of that has been used on sort of like margin, margin creating. Sorry, I've actually forgotten the word for this, and I want to call the whole bunch of CFAs, and I'm like, damn it. You know what I mean? Where you take a little bit and then you leverage up, so leverage trading, and you can actually get a really good idea of what is happening in the entire financial ecosystem that you just can't get with traditional finance.
Thank you, Janine. There were a couple of questions about resources, good reads that you could recommend about crypto, blockchain, technology, coin comparison, DeFi. Is there anything that you can recommend?
Yeah, there is. I mean, the Easy Crypto website, we've got a lot of good articles that you can browse around, and we're always adding more stuff and trying to, I actually sent the list of questions that you guys will send through to my team as like, hey, here's some more stuff that we might want to be writing articles on and addressing. If you're a financial advisor, I got a good resource the other day for financial advisors on this. I can send that through if that's useful. Otherwise, just Google stuff, and the key sources that I find are good are things like Medium has a lot of good articles. They're usually quite reputable. The big crypto houses like Coinbase, Kraken, Crypto.com typically have quite good write-ups. And then if you wanted to get more, more depth and more detailed into stuff, perhaps also try looking at some of the podcasters out there. YouTubers, not so much. I'd stay away from YouTuber, but there's a lot of good podcasters. And yeah, my team, we could send through some recommendations later. Actually, I think some of my team might be on the call. So if anyone has any good resources, just chuck them in the chats.
Cool. Thank you. There's another question here. What are the key features of cryptocurrencies that you think are good indicators of success? What do you normally look at?
For me, it's very similar to traditional world, right? Like, are they solving a real world problem, and are they two things for me, really? It's like it's product market fit, right? So the first is, do they have a real product? So is it something that's solving a real world problem? And secondly, is the marketing, like, can they communicate that to the public? Because one of the things that I've learned, and like I'm not a marketing person, and it kind of bugs me that this is the way the world works, but it's the way the world works, that it doesn't matter how great your product is, if you can't market and if you can't tell people about it, you're never going to be a success. And one of the really interesting examples of this is, well, interesting to me at the moment, watching brief on this, but take Shiba. And so you guys might be aware of the Dogecoin thing that happened earlier this year. Dogecoin is kind of this joke meme cryptocurrency that's been around for years and years and years. And then it just suddenly started to just massively go wild because people like Elon Musk were tweeting about it. So it went up like hundreds of % of, in value. And it was just the whole internet, it was around the same time as GameStop and all that kind of stuff. And it's like, basically was just a sort of example of how community power can shift the dial on assets like this. And then off the back of Dogecoin having these massive spikes in value, an anonymous personal group created this new coin called Shiba Inu. And just as context, Shiba Inu is the type of dog that the Dogecoin mascot is. And so again, just more jokes, more internet memes, more kind of, in jokes for the group. And Shiba, however, they not only had this really strong community and marketing behind them, as there's a huge community of people behind Shiba and really passionate about it and believe in it, but they also have a lot of really good products. So this DeFi stuff that I've been talking about, Shiba's one of the they were one of the quickest adopters of these different types of DeFi things. They have staking, lending, borrowing. They call them like cute dog related names like Dig, I can't remember all the rest of it. It's like, you know, you can basically bury a bone, you can dig, you can fetch. And it's like the whole thing's a bit of a joke, but it's really gaining traction. And I'm not going to write it off. Like, I personally don't have Shiba, but I'm like, if you've got a product and you've got a market, that's kind of what every business is looking for, right? So yeah, so going back to how I evaluate products, definitely product market fit. Also, I would look at the team behind it because that's really important. There's cryptocurrency has a bad reputation for what they call rug pulls, where a project's kind of developed up, it's marketed, all these people put their money in, and then the founders just disappear. And because there's a bit of a lack of regulation in the space, that can still happen. So definitely do your research on the team, knows who's behind it. And then also just the community that's involved, like get to know the community, because the community usually is a pretty good representation of what the product and the project is like.
Awesome, thanks for that, Janine. Do we have another section to go through, or can we keep doing?
I have one more section that is just a few last Q&As. Goodness, we've almost gone for an hour. Oh, I just saw the question from David about how can I still use search engines but hold my info. Take a look at a project called Presearch. This is something that's relatively new, but it is an internet search engine that is built on the premise of being community controlled. And so instead of, for example, you know, if I want to pay for Easy Crypto to come up in AdWords, at the moment I pay Google. Google serves those ads up to you, and then you, you know, you basically consume the AdWords and get no benefit from it. Whereas Presearch is trying to change that model by having a community-owned internet community. You know, anyone in the community can bid for things like AdWords, and people can bid to provide that infrastructure. And I think, if I'm correct, the community, you get, do you get Presearch tokens for using the service as well? Yeah, so as the users of that internet search engine, you also get paid for using it. So you're basically rewarded for your engagement, as opposed to the Google model where you just get served ads that you don't really have any options around. Interestingly, Google got told recently that they had to they had to decouple their search engine from their phones. So now phones in Europe are being sent out, all Android phones have Presearch installed as the default search engine, which is super interesting and could sort of be a game changer for adoption of this internet search engine. But yeah, an interesting project, something to look into. And that's the type of thing that if you're wanting to look into projects and assess their value, you know, this is the great questions of what's the product, what's the market, what's the team, what's the track record. And yes, someone mentioned Brave. Brave is awesome. That's a very, you know, an excellent browser that provides a lot more safety and also has a built-in, a lot more privacy, and also has a built-in security cryptocurrency token with it. Okay, I'm just going to burn through really quickly what I had left. Isn't crypto just used by criminals? No, actually, cryptocurrency is a really bad way to launder money or do other criminal activity because of the fact that it is completely transparent and traceable. And as regulation gets stronger, it will become more and more difficult for any criminal activity to be undertaken through blockchain networks. So this is a misnomer that's existed for quite a long time. I think it's from back in the days when crypto first started, no one was looking, so you could get away with crime on it because no one cared. But now that people are looking, it's a really bad way to put illicit proceeds because you can track every step of the way where they go. This is an example of what that looks like through blockchain analytics. So we do this for our transactions. A customer might send crypto to this address, and then we can see where it goes to next, where it goes after that, where it goes after that. And in this regard, it's very different from traditional banking, whereas with a bank, they can see where their customer sends money to, and then it's completely, they have no visibility after that. So blockchain, really transparent, really traceable, and a very great tool for preventing money laundering. Isn't it bad for the environment? I probably already talked about this one, that's really that first generation concern. But just as a, you know, as a piece of perspective on that, the use of appliances in United States households which are not being used, so just appliances that are plugged in but not actively being used, that is almost double the energy use of the Bitcoin network. So it's all about perspective. And again, that piece around innovation, the networks are becoming more and more environmentally friendly and innovating away from high energy uses. Someone asked whether New Zealand taxes every time you swap. Yes. Cryptocurrency is property and any disposal of it is counted as a taxable event. So disposals, if you swap from crypto A to crypto B, you are disposing of crypto A and you need to recognize the tax on that transaction. If you're a trader, the rules are different, but for most people just using cryptocurrency infrequently, that is the case, and it's a little bit of a pain. Easy Crypto does have a portfolio tracker that can help with that, or you could look at a service like Taxoshi, which has a bit more advanced features. What about cybersecurity, crypto scams on safe wallets? This week is Cyber Security Week, so great point to talk about that. And these are my 5 sort of rules of what to keep in mind. A lot of these are basic, and people should be doing these anyway, around passwords, PIN locks, keep your computer clean, and always use a password manager. If you can remember your password in your head, then it's not strong enough. So if you guys have any passwords that you know off by heart, delete them, go get a password manager, set yourself up right. For crypto specifically, always back up your wallets. So if you don't know if you have cryptocurrency and you don't know what this means, hit us up on our help desk or have a Google online, but you should have a 12 or 24 word phrase that you need to have backed up somewhere safe and not online. And secondly, use a hardware wallet for added security. So if it's more money than you're willing to lose, you should definitely have a hardware wallet. And I can't stress this one strongly enough. And again, if you're not sure, feel free to hit us up. We're always happy to help. I think that was probably the end of my, that was the end of all of my presentation bits. So I think we have 3 minutes left for more questions. Sorry, Babs.
All good. Maybe let's try to answer a couple of questions in those 3 minutes. So there were a couple of questions about adoption and timeframes. So when do you think we'll see a country release a cryptocurrency backed by their economy?
Oh, that's a really interesting one. I am not sure. I mean, I guess in technically sort of any government issued cryptocurrency would be backed by their economy, right? Because the New Zealand dollar is effectively backed by the strength of the New Zealand economy. So if we had a New Zealand CBDC, it would be the same. I think there are already some CBDCs, perhaps Bermuda has one. Whether that's sort of strictly backed by their economy, if anyone cares too much, I'm not sure. But yeah, don't know on timeframes on that one, sorry. I did just see a question from Manny. Hey, Manny. Can you still stake if you use a hardware wallet? Yes, you definitely can, and you should absolutely be using a hardware wallet for anything. So if you use MetaMask, connect your Trezor or your Ledger to MetaMask first, then use MetaMask for staking. Again, questions, just hit us up, but definitely hardware wallets everywhere. And you can buy them from us.
Good to know. There was another question earlier around when do you think we'll use crypto as fiat currency? Like, do you think we'll get to that point? And again, when do you think that will be?
I think that it will just happen gradually over time and it will be a bit invisible. And what I mean by that is there are already crypto credit cards. So I've got one here in my wallet. It's looks like a normal credit card. When I swipe it at a merchant, they get New Zealand dollars in their bank account just like a normal credit card, but I'm spending crypto. And so I think that we're going to get more and more of these ways that just kind of meld crypto and traditional currencies together and do it in a way that's relatively invisible. As merchants get QR scanning at terminals, so FPOS terminals are becoming more and more QR enabled. And thanks COVID for getting us all familiar with QR codes. When they are QR enabled, then you could pay with crypto, you could pay with fiat, you could pay with a whole lot of different payment methods, and they will just be seamlessly working together and kind of invisible under the hood. And yeah, +1 for Bitwarden as a password manager. It's great.
Awesome. It's nearly 1 o'clock, so I think we'll wrap this up. Thank you so much, Janine, for your time. This has been super insightful. I'm sure everyone found it very interesting. And overall, we had like 70 questions between the questions that before the session and the questions that got asked during the session. So thank you so much for your time and congratulations on your capital raise. So we look forward to seeing what you do with that money and how you make your business grow even more. And
thanks very much, Babs.
And thank you everyone for joining today's webinar. A recording will be available in case you missed some of it or want to watch it again.